Hello, everybody, and welcome to Strategy Now here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we're taking a look at the midday market, see what kind of approaches both institutions and traders are taking right now into the midday hour. Basically, you've seen that today's session has been mostly underpinned by a wait-and-see kind of approach. Basically, traders, investors, institutions are unwilling to push either way as far as a directional bias before we have President-elect Trump's inauguration. Taking a look at the fixed income markets, right now I just want to give you a current update on what's going on here in the midday. You have the 10-year down about 0.6% at 123.31. You have the 30-year down about 1% at 150.13. You have the Dow Jones down about 43 at 19,691. The Russell 2000 down 1160 at 1345.90. And you're also seeing the NASDAQ down about $1.25 at 50.53.25. And then you have the S&P 500, the E-mini futures down about $5 at 2261.25. Basically, we're seeing that the markets are taking a little bit of a break, lull, a wait-and-see attitude before we get the inauguration get through without any incident. And then basically we're going to see after this enormous run-up in anticipation of new policies, of new regulation, deregulation, removal and repeal of healthcare components. I mean, the fact is that there has been a lot of promise that has been invested upon, but we're going to have to wait to see if this dream actually becomes a reality. Now, the central bank, though, out of Europe did come out, and I wanted to highlight this into the midday because I think this is why you're seeing the markets a little bit more tepid. After the ECB President Draghi came out with his more dovish tone, I think you saw that not only did the euro slide, but you saw that the markets took a little note and they started to pull back universally across all fronts. The euro did pull back about 0.1% so far against the dollar at 106.20. And, you know, when you look out over the landscape, you kind of have to take a look at where the strength is. And right now, the most notable and only area that I see as far as the cyclical sectors that has strength is in the industrials. Taking a look at XLI up 0.6%. Basically led the way after this morning when we saw that overnight Canadian Pacific announced their earnings, good solid earnings and guidance. Stock was up $7.40 this morning. Now that was much greater than it was actually down after hours after earnings. Well, what happened was that CSX, the Wall Street Journal reported that Hunter Harrison is stepping down and going to be pursuing changes at CSX after he's leaving from the Canadian Pacific and leading that company. Now, there's been a lot of discussion about private equity, consolidation in this space, in the railroads and in the transportation space. So it's going to be very interesting, but you have Canadian Pacific up $7 at 152. You have CSX up $7.13, trading at $44. An impressive move. Want to keep a very close eye on this sector after what's been an enormous run-up over the last 12 hours. What we are seeing that is the biggest laggard on the cyclical side is energy. Energy's down about 0.7%. Take a look at XLE. And that was after the Department of Energy, the EIA, came out and basically said that there is a crude oil inventory build of 2.3 million barrels. Now, there was an anticipation that there was going to be a small draw of about 342,000 barrels. Now, that didn't happen. Crude fell down about initially and then bounced, was on its session high, and is off that session high. It's at $52 right now, down basically up about 0.3%. But again, we're going to watch the crude contract very closely. Going to be very volatile, especially as we get into now the policies as far as energy is concerned. Trump said he was a fossil fuel fan. So we'll see. What else has been lagging has been financials. Financials right now, XLF is down 0.3%. You're also seeing healthcare down 0.4%. There's been also some disappointment in the biotech area. The three largest biotech names, Amgen, AMGN, down $1.88 at 153.88. You're also seeing Gilead Sciences, GILD, down 63 cents at 71.50, and Celgene, CELG, down 158 at 113.14. These pullbacks of 1% to 1.5% have put pressure not only on the drug and healthcare side, but you're also seeing a little bit of pressure being recognized in the technology side. As I said, treasuries have been moving. They've been moving to the downside. You continue to see price pressure on the downside. The euro curve has steepened as the front end of the curve has held up a little bit better than the back end. You're starting to see that the 2-year is only up 1 basis point at 1.23%, while the 30-year is up 5 basis points at 3.06%. So you're seeing that the price drop on the long end of the curve, as we noted, being down basically about 1% on the 30-year as far as price action, and up 5 basis points on yield. There is some movement there, and we're going to see where this capital is going to start resurrecting itself. But again, as I said, right now what we see is wait and see attitudes here on the street. So with that being said, we are going to come back at 3:30 Eastern time, and I am going to be doing Tech Talk. I'm going to give you some great trading ideas with some transparency, as well as some I'm going to give you some levels, some critical levels that we're going to want to watch, and we'll take a look at what the market has to offer for us at 3:30 Eastern time here at MarketStream.live. See you at Tech Talk.